This is part 2 of this breakdown of Euro USD. We have come a long journey, and I was trying to fix the video to at least 10 minutes, but at least it has spilled over. So give me at least 2 minutes of your attention, and I will be through with this. So this is the second part. Now we are saying we are trading another expectation. This expectation is called, we are expecting either the first or the second day to close above the previous weekly high. And we are saying this daily expectation equals to 4-hour profile. And now we are trying to trade the 4-hour profile. And we are saying for the 4-hour profile, the drawn liquidity is the daily expectation. And this daily expectation is the previous weekly high. I hope you're following. Then our bias is 2 candles, at least 2 H4 candles to give us the bias. And looking at the 2 H4 candles, we did not get a bias yet because this second candle did not engulf the first candle, which formed from midnight to 4, then this one to 4 to 8. So for us to continue with the bullish bias, we need an advanced bias 1 or advanced bias 2 to activate. When I say advanced bias 1 or advanced bias 2, I'm saying simply one more candle at one lower time frame. Like for this H4, one lower time frame is H1. So one candle on H1 or 2 candles on H1 can activate our advanced bias. So playing one candle, we got our advanced bias activated. So then we now trade the H4 profile. So how do we trade it? So let's fill up this trading plan. So now we have our bias confirmed. And what is the advanced bias 1, which is bullish. So now we have our bias. Then we go to which part? Our narrative. So our narrative is where we mark the PDRAs. And we are interested with the fair value gap and the previous candle high. So when we go down to H1, we now mark, let me just take this line, change it to blue. So I've just changed it, mark the previous H1 high, and then a fair value gap also. I can see a fair value gap here, although this is a breakaway gap. Now, after I've marked my narrative, I go to my context. Now, in my context, I'm just observing price action. So we are saying we are observing the price action, but we are observing with an expectation. We are saying for high probability entry or high probability context, we are expecting either the first or the second candle to expand above the previous hour. So the first, the second. So the second candle gave us an expansion above our previous narrative high. So what next? We mark the candle that gave us an expansion. We mark both the high and the low. Why are we marking both high and low? Because the high will give us our entry and the low will give us where we'll put our stops. I will show you when we switch to our entry. Now, we switch now from context, we switch to entry. And our entry is normally in a 3 minutes time frame. And we have some entry rules. Number 1, maybe I can write it down. Entry rules. Number 1, the price leg should have a shift in market structure. Market structure shift. Number 2, there should be a fair value gap in the price leg. Number 3, there should be an order block. The presence of an order block. So, and then we are saying number 4 also, for our entry to activate, we are expecting a bullish engulf. And in our case, when we say we're expecting a bullish engulf, we are saying any candle that will close above our previous context swing point, the line that we had drawn. So you remember that we said the candle that gave us the expansion, we mark it both high and low. So this line is what we are going to watch in our entry. So let me switch to M3. So for us to enter this trade, bullish engulf will be defined by a candle that will close above this is our line. So if any candle that closes above our line, that is already a bullish and gap. So let's play. And we are saying for high probability, we are expecting either the first, second, or the third. So 3 candles. Either. So 1, and the first one gave us an expansion. Now let's see quickly. Do we have everything that we want to see in this price leg? When I say price leg, I mean this specific price leg that gave us the expansion. This one, this is what we focus on. So number 1, is there a fair value gap in this price leg? And I can see lots of fair value gap. This is a fair value gap. This also is another fair value gap. So we have fair value gap in this price leg, which makes, or which rather shows that there is momentum. Number 2, is there an order block? Yes, an order block is this last candle before price turned to this bearish candle before price turned bullish. So now this order block is, we put our stop loss slightly below it. And you remember this line that we had marked. I think this one will give us a guide where we will put our stop loss. So this is where our stop loss will be, and then our entry will just be within this first candle. Now, let's position ourselves for this. So I'll take my position sizer. If you're using MT5, most probably you have a position sizer calculator. Because that's automatic. I will share one time how you do calculate positions with the position sizer. But for this one, this is my back testing software. So we are risking 1:2. So that's all I'm setting here. So we are risking 1, we are targeting 2. So from here now, there are 2 things now that determines the success of this trade. Number 1. So we are going now to trade management. How shall we manage this trade? Number 1, time duration is number 1, is the key. And number 2, we will still use our profile. We still use our profile to manage our trade. Now, let me show you how we do it. So for our 4-hour profile, the trade duration is actually 2 hours. So in this case, this is 9:30. Our 4-hour candle started at 8. So 8 to 9, 9 to 10. So we still have 30 minutes to 10 before the 2 hours elapse. So for now, I can tell you that this trade, the trade duration was actually now it had to run over. So the 30 minutes that is left plus the 2 hours that is still there. So it's already 9:30 and the 4-hour candle will close at 12. So how many hours are remaining? So 9:30 to 12:30, 9:30 to 10:30, 10:30 to 11:30, 11:30 to 12. So that is 2 hours, 30 minutes is our trade duration. So let me play this till 12, then I'll show you how we start managing it. So I'll play it all the way to 12. What's the time? This is 11:30 because the 4-hour candle closes at 12. Exactly. We are now at 12. Where is 12 here? Yeah, this is it. So this is where our price was by the time the 4-hour candle was closing, and I can say our trade duration had already elapsed. So what we are remaining is to manage this trade. So how do you manage it? You go to the 4-hour time frame. We use the advanced bias 2. You mark the 4-hour candle that you are, and then you go to H1. You expect an expansion between the first and the second candle. So the first, the second candle. So the first, the second candle did not give us an expansion. So at this point is where now you choose to break even your trade. So we'll come here, move our trade to break even, and now we let this trade run risk-free. So if I do play it faster because of time, you see that the trade smashed the take profit. This is how we were able to take this trade from Euro USD. Obidi Prof, signing out.